Hi, Sean Haynes with the Agri CFO and the Ag Center. Welcome you back to our weekly commodity reports. If you're new, thanks for checking in with us. We do this every week, talking through the various commodities here in California. We're California focused because we feel that most people don't focus on California like they should. If you're an existing user, thanks for coming back and suffering through it with us. And we're always looking for inputs. If there's a crop we don't talk about, please ask us. If you've got a question about something, please ask it and we'll try to get back to you. I'm usually pretty good about answering them in the post. I won't directly call you out and I won't say, hey, Joe, why'd you ask that dumb question about beef? I'll just talk about it and then hopefully it answers questions for you. So here we go. So let's talk about nuts. Quick update on the almond markets. Bloom was really good as far as size of crop goes, as far as the subjective estimates talking about at 2.5 billion pounds. That's putting some pressure on the market and keeping things cautious on the buyer side as well as the seller side. We've seen about 10 to 15% per pound slip in almond prices since that report came out. Shipments have also off, so same time last year versus this year, about 32% less than prior year, which is creating kind of a backup in the channel and some more carry-in than was expected, which has also put some downward pressure on almond prices, which is causing some worries in the market right now. Almond industry is kind of in a weird spot, and me as an economist looking at things and the cycle of life. In the beginning, lots of money being made in almonds. Had this growth in the almond segment, and now we've kind of hit this maturity point where almonds are almost commoditized a little bit, and maybe the world demand for almonds is kind of saturated a little bit at 3 billion pounds, and so there's some concern about that. And so what I'm worried about is, one, this price point kind of staying in this level for quite a while, or at least third year of losses for some folks, and it's going to cause some stress in the market. So we'll have to see. I think a lot of people are hoping that the subjective estimate was off, and that when the objective estimate comes out in the near future, that it's going to be a much smaller crop than expected. Crop size is good, but we'll have to see what happens with the overall size of the crop, and that'll really determine how the year is going to end up on the almond side. Other than that, growing conditions are good. Not hearing a lot of problems other than just people doing the regular husbandry practices on those. And that's kind of the quick and dirty on almond markets. Walnut producers still suffering losses. Price for their product is well below cost of production still. I think that's going to be in that loss scenario for a sustained amount of time. Just a large crop, 760,000 tons last year is what the final numbers came in for. That's adding to the overall carry-in problem that we've got of about 860,000 tons. Last year's 820,000 tons or less, so that's up about 8% from prior year. As long as that carry-in and that large crop size sticks around, it's really going to hurt the ability to get some pricing for those products. The other issue is you're able to grow that product in many other places, Chile, China now, and Australia, what have you. From a long-term point of view, from the walnut side, I think you're going to see continued stress. I think you're going to see prices down, and we're going to have to see what this crop pullout looks like. A lot of guys talking about pulling trees and going to another crop. You're going to have to do some of that to get some disappearance as far as product goes, to get to more parity with the market, and we get some price recovery to the point where guys are making more money again. There is some help coming in the form of that buyout with the federal government buying about 47 million pounds or whatever it was, but those were really kind of liquidating lower quality product pieces and brokens and things like that. It really wasn't taking care of the higher end product, which is also kind of jamming things up. So shipments kind of staying behind pace, carry-in high, and it's going to keep prices low for quite a bit of time. Pistachio crop came in right around expectations last year, about 896 million pounds. Production was up quite a bit, say 30% to 40% versus last year. Worldwide production was also up for pistachios, but exports and sales have kind of continued to support the market. Looks like there's plenty of demand for it. So I think export markets for pistachios from the U.S. are up 10% from last year. There doesn't seem to be a large carryover problem. So I think for the short term, pistachios look really good as an alternative nut source, and maybe a new growth market in the California segment that maybe almonds and walnuts had in prior years, but aren't going to exceed in future years. Again, life cycle of the market, if you're looking at life cycles, which I'm a big proponent on right now, we're still kind of in that growth segment for the pistachio side, especially with water issues, and also with guys looking to replace maybe almonds in areas that have water issues, or walnut crops in areas that you can grow pistachios with this new nut crop. And then you've got like this nice 7 to 8 year period of time where those trees really aren't super productive. So as these trees come on, there's quite a bit of non-bearing acres still to come on, but it looks like the world's still in demand for pistachios. There isn't a lot of competition from other areas on it. So in the short term, prices look to be pretty good. We'll have to see what the crop estimates come in next month. We'll have some information on that when it does come out, and have some special reports to kind of walk you through where the current pistachio market is on prices, as well as future predictions on crop for the year. So that's it for the nut market. Let's talk about dairy in California. Quick update in the dairy markets in California. Dairy continues to get impacted negatively by this large cheese inventory. Really, cheese has been produced at low prices in the Midwest for the past year. U.S. prices versus world prices are trading at a premium, and they're just not translating to sales. So that's got this kind of lug going on to get cheese moved out. They got to bring the price down. Butter still at parity with world markets. It came off a little bit this week, but not that much. And there's not much room for it to run downwards as far as the world market goes. So I think you're going to continue to get some support there on the butter price versus a free fall. But that cheese impact has really brought down that class 3 price to about the 15.11, 15.15 mark. My worry right now in the short term is that if you look at cash prices for cheese versus what futures prices for cheese are, that cash price for cheese is lower, which speaks to like a 14.01 to 14.30, depending on the calculator you use, price for class 3 milk, which means you have another 80 cents downward on half of your milk price, right? You can see another 40, 50 cent downward stroke. So that's pushed down prices on milk for the next 3 to 4 months in the high 16 to low 17 range, and it kind of looks like it recovering to about low 18s in September. But I really think it's going to kind of pull down as long as that cheese inventory is sitting over the market. Powder markets recovered a little bit. They've been kind of stagnant, but you're seeing a little bit of push up on pricing there. So we'll have to see where that goes. There is some relief on the forage side again, and the feed side. You know, corn's staying low relative to last year's from those contracts guys have taken a September reset. Forage in the field on the corn side, looking at 45 to 55 kind of average price for corn silage. Hay's off a good 30 to 40 bucks per ton on the alfalfa side, and then grain hays, your wheats and your oat hays, really have come off down. I've seen prices as low as 135, and then almond hulls 175, 180. Everything's kind of coming down. Guys are eating hand to mouth. I think it's creating a little bit of extra supply and bringing some downward pressure on prices. And plus, guys just can't pay for it. So all that feed really isn't going to get into effect until after the summer when everything gets harvested and brought into the barn, but you get some support there. Dairy price size, as far as cattle go, cull prices are still high. There's a lot of demand for beef, anywhere from 85 to $1.10 per pound for cull animals, which is kind of crazy. Bull calves have pulled up to the whole $180 to $200, maybe north of that by the time this report comes out, range. And then crossbred bull calves, I've seen some crossbred bull calves this week as far as pricing go for the next couple weeks, crossing the $500 mark for the first time. So I'm seeing $475 to $500 for Angus Holstein crosses. So you're seeing some cash support there, but not much, and not enough to offset the fact that the cost of producing milk is going to be much less or much more than the price they're going to be getting for at least the next 60, 90 to 120 days. And I think you're going to see some dispersals coming through accordingly for that. On the other side, there has been some talk down in Tulare, the PMO, the pasteurized milk order, did some surprise inspections on some dairies down south, about 20 of them. Results weren't good, and so there's some talk about the inspectors going back out again and kind of talking about corrective procedures. All those tests were down in the Tulare region, so if you're in the Tulare region basin with your dairy, just kind of be aware that you may get called for a surprise inspection by those folks, or a recurring inspection to kind of go through what some of the issues were with quality down there. And so kind of share that with your friends, make sure everybody's following good milking practices and kind of ready for that inspection. That's a sad story about dairy. Let's talk about a happy story, the beef markets in California. Beef cattle continue to trend upward. We're looking at 260 to 270 now for 4.5 crossbreds on the average with the LRP. Looking at cash markets, I've seen 290 to 295. So high prices for cattle going into the market. That's also pulled up the beef calf price on the crossbreds at the dairy side to past the 500 mark for the first time I've seen for a while. And I've seen $475 to $500 for those calves at the dairy. I think they're going to peak about $550 again. I just think at that point in time you stop making money on those calves and you really can't bring them in. Beef cutouts remained high. You've seen choice all of a sudden pop to $332, which is like a 30-cent raise, and $310 to $311 for select. So box beef values have kind of moved up with the price of cattle coming in. It's really squeezed the packer margins all of a sudden, though, with this high price of cattle kind of coming in all of a sudden with feed prices not coming off enough, where you're almost at a break-even point at this range with the packer side. So we'll have to see how that kind of plays out in the long run. On the feed yard side, I think guys are still making about $300 to $400 per head, but I wouldn't expect the packers to kind of push back a little bit, either taking some of that profit for themselves to keep going or pushing retail pricing up if that's available. We'll have to see what that does to demand. In the long run, I think one of the things that we've been talking with some of our beef producers about is, the cattle markings are really good. There's a lack of supply for cattle for the demand going out there. It's pushing pair prices high, right? You're still anywhere from $1,800 to $3,000 for pairs out here, and cull cows even are staying high in the 90 cents to $1 pound range. So guys are kind of culling through their older cattle, right, taking advantage of that, maybe holding some replacements. But one of the extra bright points, maybe if you're a beef producer, especially on the cow-calf side, is looking at maybe holding on to some excess heifers to raise replacements for the specific purpose of selling to people that want to expand into this market. There's gonna be, I think, in the next year or so, there's gonna be a demand for additional heifers as guys sort of build out their herd inventories if they can, if they have the grass, and the availability of cattle is gonna make those heifer replacements much higher in value. So we've been talking to our guys that, hey, don't just think about marketing these cattle off for beef, but also look at some of these heifers. Maybe you have more heifers than you need for replacement needs in your own herd, but maybe retain them for a year and take a look at what the value of that is versus what you can carry them for, and sell them as a secondary source of income into the next year to 2 years as these prices stay high. USDA thinks prices are going to stay high, move up another $8 per head, so it's another 8 cents per head, or not 8 cents, but 8 bucks per hundredweight, which is another 8 cents per head over this year. So the long range view from USDA, and a lot of us in the market think it's going to be good all the way through 2024. You never know, something can happen, but just looking at the general demand supply dynamics of things, with the amount of cattle that there is, the stress from drought in the Midwest, which is reducing grass and the ability to feed these cattle, I think there's still going to be constricting pressures on expanding the herd for quite a while. And even if it did start to expand, all of a sudden you're looking at 2 years before you really get additional numbers in the house again. So that's the fairy tale story of beef right now. Let's talk about the crops in California, where they're at. Plantings is scheduled. Folks are finishing up the tomato crop right now. It looks like it's going to be a late season push, which is going to be interesting to see how things kind of come in for harvest if it's all at one point in time, since the planting window is so tight, and how the process is going to handle that and where you fall in line as far as date goes when the process is going to take your crop. Price is, of course, $138 per ton on the contract side, but with these late season bonuses, I think guys are going to be in the $150 range to $142 range. So good price for the crop. Land a decent sized crop, you're going to be in good shape. And if you took insurance on the crop at, say 38 tons an acre, 34 tons an acre minimum, you could buy up to 43. I don't see how you lose money as long as you control your costs and don't have a crop failure. Cotton side, acreage is down. Really hasn't translated to more price. Maybe it's back east. They've got been able to get some plantings in. We're looking at 84 to 85 cents per pound on the July cotton markets, down about 30 to 40 cents from last year. So we'll have to see how that kind of plays out. But the cotton markets come down. That's going to affect the availability of cotton seed in California, which may cause that price to kind of fluctuate a little bit. We'll have to see where that goes. Hay side, grain hays, wheat, and oat come off pretty substantially down to the 135 range. I've seen some lows as 120, highs of 180. Guys eating hand to mouth and that stuff. The availability of other forages are there. So I think it's just continued pressure on that market, and it's kind of done for the season. I'll have some more information on what straw is coming out at next week's meeting. Alfalfa's come off about $30 to $50 per ton, depending what type of variety and location you're buying it from. But again, hand to mouth. Guys just aren't buying as much quantity, which is putting some additional supply in storage and other things. If you're a grower and you start seeing your alfalfa supply start to stack up on the field, you get a little nervous and maybe discount it to kind of get it moved out. Test hay is going to still be in tight supply. I think that market's still going to stay a little bit strong because it's just not available and it's a very specific need. So we'll have to see where that goes. Strawberries, prices come up past week versus last week. Looking at $7.50 to $8 flats for conventional and $11 to $12 flats again for organics. I think, just again guessing, if you're looking at like with trends, production's way off of last year. From same time last year, we're 50% or 30% down, depending which markets you look at, just from timing of the crop and also the availability of the crop coming out because of flooding issues. Also timing of the year, you've got 4th of July coming up, school's getting out, so strawberry usage kind of tends to pick up when the weather gets warm and these events happening. So you're seeing kind of a price adjustment. We'll have to see if that follows all the way through the market and see where the crop ends up. It could be just a behind the market side, or if we get to the end of the season, which is late July really, and see that the crop's still off, we'll know if it was an acreage withdrawal because of flooding issues. On the other side of things, cherry market, I haven't got much information on that yet as far as pricing goes. Product looks really good, sizing looks really good, the crop size is really high. That all points toward falling prices for those cherries, especially since these other stone fruit crops that have been coming in now, peaches, nectarines, and things like that are all of a sudden starting to show up in the markets because they were late before. Cherry isn't the showcases that it was in the past, so that's going to put some downward pressure on that. But all in all, crop conditions look good. Prices seem to be holding up pretty well. If you've got a crop to bring in, we'll give you some updates on additional crops as they come into season in the next few meetings. That's quick and dirty about California crops right now. Let's talk about interest rates and what's going on in the markets there. Home mortgage rates come off a little bit this week. They seem to be in the 6.5 to 7.2 range for anywhere from 10-year money to 30-year money. Treasury market's really inverted, like 1-month treasuries are 5.25%, 30-year treasuries are 3.9%. So man, it really points to people thinking there's a recession coming or a reset in rates coming in a couple years. When that's going to happen, who knows? But if you look at the CME Fed Watch uh, deal, people think there's going to be a pause in the rates with this June meeting. Not really anything changing, but with the July meeting, a good chance of a quarter to a half-point rise. If you look at the expectations of economists on that little chart, 80% of people think there'll be a quarter-point rise again in July, and then just kind of holding off to see what things are going to happen. So this jobs report's kind of inflationary, right? If you have lots of people getting jobs, and if wage growth really is increasing, that's inflationary, right? More money to spend. A lot of us economists that are looking at things saying, hey, if I've got a 399,000 person jobs report, but my unemployment rate just jumped up, don't those kind of counteract each other? And then if you look at some things for real wages, maybe it's a 0.7% rise in actual wages, but real wages versus inflation, most people think that's a negative 5% per year. So the market seems to be pointing all over the place, creating a lot of uncertainty, so people are trying to price that in, and they aren't doing a very good job of it. The other problem the banks are going to have too, they may have to raise rates or constrict lending, is a lot of money is moving into money market funds, which you can't lend out on a fractional basis. I'll talk about in tips of the week this week. And so that's constricting the supply of cheap money to the banks, where they have to borrow at a higher rate, right, from the Fed to get those things done. So that's also affected farm mortgage rates. I'm seeing anything from, check my chart here, but anything from 7.8% down to up to 8.08% for 30-year money. Floating money seems to be around 7.5 to 7.65. Just the mortgage rates, real estate have really picked up. Operating rates on operating capital at these farm levels, anywhere from 7.5 to almost 9%. It's really crazy high, 3 times what it was maybe 2 years ago or 1.5 years ago. So that's putting some additional pressure on operating results for these crops. Jumbo mortgages came down a little bit, so the spread between jumbos and regular home mortgages kind of spread out. So jumbos I've been seeing about 6.3, 6.5% for 30-year money. I don't know why that is, but maybe it's a better credit quality, or there's a flight to larger dollar amounts because you make more per loan doing that. But that's kind of been an interesting conundrum to watch those markets kind of close up and spread back apart again. So just a lot going on in the interest rate markets. Hard time to fix rates, but you kind of have to if you're doing things. Last comment I'll have is this really slowed down the rate of sales going on in the real estate market. Housing sales, sales of ag real estate, in my market are just really almost non-existent. They just aren't happening like they used to. That cost of ownership's there. Commodity costs are at risk and in question, right? So people are looking at it saying, how do I make money at this? If I'm going to refinance this property for my down payment and pay 8% versus the 4% I've got locked, right? I'm immediately adding 4% to my old debt and then taking on new debt at 8%. But I haven't seen a collapse or pushed down on the prices for the ground yet. So this is kind of this standoff going on, everybody playing chicken. So you kind of wonder which side's going to break. But that's kind of the quick and dirty interest rates. So thanks again for listening to me and the dulcet tones of my voice talk about the commodities in California. If you want to see more or get some additional information on pricing, we do a newsletter every week for people that subscribe to us, as well as full content and all these commodity reports. So you can kind of see week by week what's going on with rates, different commodities, actual prices being paid in the market in California, and then also some special exposés when we get them on markets, for example, pistachios that we've got coming up that you won't see anywhere else. So please click on us, subscribe to the website, like us, follow us, whatever you want to do. We'd like to get some additional support and pull through on this thing, and we really feel strongly that this is a farmers for farmers kind of educational system and news system, and we'd like your support. Thanks.